Welcome back to Investing Talk Podcast. Today, we're focusing on NRG Energy. One of you sent in a bunch of information, actually, and we're going to, extract the key insights to help you understand what's happening with this company right now.
Yeah, we've got quite a bit to go through here. It covers basically everything from what NRG actually does, their general overview,
Right.
to how their stock's been doing recently, their financial health as it stands now, what strengths the data seems to highlight, maybe some potential weaknesses or things to watch out for.
Okay.
We've also got a sense of the market feeling about the company, how they stack up against competitors, and what the future might hold based on all this.
And there's more specific stuff, too, right? Like earnings.
Oh, yes. Their latest earnings report is in there, details on recent strategic moves, and a pretty thorough due diligence report that looks at their financials, business operations, management valuation, the works.
So our goal here is really to cut through all that, synthesize it, and give you a clear picture of what's, most important about NRG Energy today.
That's the plan. Trying to connect the dots from all these different pieces.
Okay, let's jump right in then. For anyone who isn't maybe super familiar, what kind of company are we talking about with NRG Energy?
Well, NRG Energy is a major player in the North American energy scene. They also do home services.
Energy and home services.
Correct. They're involved in generating electricity, selling energy directly to consumers. That's the retail side. And they're increasingly focused on sustainable energy solutions, too.
Okay, so they're pretty big.
Oh, yeah. They serve a very large customer base, over 7.5 million accounts. It's substantial.
So it's not just about making power. They're also dealing directly with customers and pushing into newer areas like sustainability. Sounds quite broad.
It really is. Their portfolio includes, power generation from various sources, that big retail energy business, and now with the Vivint smart home acquisition they did.
Right.
They're also in home services. That includes smart home technology and related things.
Okay, it's quite a diverse operation. Now let's talk performance. The stock performance numbers that were in the info packet, they really, they jumped out.
They absolutely did. So looking just at 2025 so far, the stock's up 14%, which is good.
Pretty decent start to the year.
But the really notable figure is over the last year, an impressive gain of 91.7%.
Wow, nearly doubled.
Almost. And importantly, that's significantly outperforming the S&P 500 index.
Which tells you?
It tells you NRG has shown considerable strength relative to the broader market. It's not just riding a general wave up.
That kind of outperformance definitely catches your eye. And this wasn't just like a one-off spike. It's been building.
The data suggests it's been building. Strong upward momentum over the past 6 months, really. And that seemed to culminate on May 12th, just recently.
What happened then?
The stock price surged, jumped over 21% in a single day.
21% in one day. That's huge. What drove that kind of reaction?
Well, the sources we have point to a combination of things. A very strong earnings report came out.
Okay, that makes sense.
And also news about some key strategic acquisitions they made. The market likely saw both of those as very positive developments for the company's, future prospects.
That kind of big jump suggests investors really liked what they heard.
Precisely. It often signals a belief that these factors are maybe real game changers for the company.
Okay, so let's dig into those financials a bit more. You mentioned the strong earnings. What were the highlights there?
Right. So for the first quarter of 2025, NRG reported a significant increase in their GAAP net income. That's compared to the same quarter last year.
And GAAP is just the standard accounting, right?
Yes, generally accepted accounting principles, so it's the standard way they report profits. A big jump there is usually a very good sign about the underlying health of the business.
And what was driving that increase?
Seems like strong performance pretty much across the board. We also saw revenue climb quite nicely. It went up to about $8.6 billion from $7.4 billion in Q1 of 2024.
Nearly $8.6 billion in revenue for the quarter.
Yeah.
And the profit numbers themselves, net income.
Looked strong, too. Net income hit $750 million in Q1 2025. That's up quite a bit from the $494 million they reported for Q1 the year before.
That's a substantial jump.
It is. And their adjusted earnings per share, that's profitability per share, basically also saw a big increase. Went from $1.46 to $2.68.
Okay, $1.46 up to $2.68 adjusted EPS. That's the kind of growth investors look for.
Definitely a key indicator.
Those are impressive quarterly growth rates. What about the bigger picture? How did the company do for all of last year, for 2024?
So for the full year 2024, their total revenue came in at $28.13 billion.
Still a huge number.
Oh, absolutely. Though it was actually a slight decrease, about 2.4% compared to the previous year, 2023.
A small dip year over year for 24.
Yes, but looking ahead, the company has announced a pretty significant plan to return capital to shareholders, which often signals management's confidence about the future.
That's the $1.3 billion plan they mentioned.
That's the one.
And how are they planning to do that, give that money back?
It's going to be through a combination of buying back their own shares on the market.
Share repurchases.
Right. And also paying out dividends directly to shareholders.
Okay. Buybacks can boost the share price. Dividends are direct cash.
Yeah.
Generally seen positively.
Generally, yes. It suggests the company feels it's in a strong enough financial position to return that cash rather than needing it all for, say, operations or debt reduction.
Okay, so strong recent performance, especially that first quarter, and a plan to reward investors. Let's talk strengths. What seems to be driving this positive momentum?
Well, several things stand out from the information. First, their diversified business model. In the energy sector, that can provide resilience if one part of the market faces headwinds.
Spreading the risk.
Kind of. Also, those strategic acquisitions they've made, particularly adding natural gas generation capacity, 13 gigawatts, plus some flexible gas in Texas, that adds significant scale and flexibility.
What else?
Their stated commitment to sustainability. That's increasingly important, not just ethically, but for investors and market perception, too. And then, of course, what we already talked about, their demonstrated ability to outperform the broader market, like the S&P 500. That's a big plus for attracting investment.
Any other strengths mentioned?
Yes, the information also points to their well-established brand name, a strong position specifically in the retail energy market, and apparently effective cost management.
Okay, so keeping costs in check.
Right. Yeah. All these things contribute to being a more robust and hopefully profitable business.
That's a pretty solid list of advantages.
Yeah.
Now, on the flip side, did the information we reviewed highlight any potential concerns? Any red flags specific to NRG?
Interestingly, no. The materials didn't explicitly point out specific red flags for NRG itself, but you always have to remember the context. The energy sector as a whole is subject to regulatory changes. That could pose risks for any company in this space, including NRG.
Right. Policy shifts can always impact energy companies.
Exactly. And beyond that, you have broader economic conditions, things like shifts in interest rates, overall economic growth. Those can affect performance too. So while not NRG-specific red flags in the data, they're kind of background risks to keep in mind.
General sector and economic risks. That makes sense. So given the strong performance and positive outlook, what's the overall feeling, the market sentiment around NRG right now?
It seems quite positive, actually. Analyst opinions mention lean favorable, likely influenced by those strong financials and the strategic acquisitions we discussed.
And the stock price action reflects that too.
You'd think so. That big jump we saw on May 12th certainly suggests investors reacted positively to the recent news and have a generally upbeat view of where the company is heading.
Okay. How does NRG Energy stack up against its rivals? Who are the main competitors we should be aware of?
The sources identify a couple of key competitors, Exelon Corporation and Duke Energy, big names in the utility space.
And how does NRG differentiate itself from them?
Well, going back to what we said earlier, its diversified business model is one key differentiator. That mix of generation, retail, and home services. And also its specific emphasis on sustainability initiatives. Plus, the information suggests they're considered a leader specifically within the retail energy part of the market.
So they're trying to carve out a position with that blend of services and a focus on where energy might be heading. Looking forward then, what could keep driving their growth? Potential catalysts?
Right.
And what are the risks on the horizon?
Well, that $1.3 billion share repurchase and dividend plan could definitely support the stock price. That's a clear potential positive.
Right, returning capital.
Future strategic acquisitions, if they make more good ones, or maybe further expansion into renewable energy generation, those could also be significant growth drivers.
Tons of risks.
On the risk side, it's largely what we mentioned before, potential regulatory changes hitting the energy sector, and just general market volatility or economic downturns. Those are always possibilities.
What about the big picture trends in energy, like the shift to renewables, smart tech? How might those play out for NRG?
Those are huge factors. The increasing integration of renewable energy sources into the grid, the whole growth area of smart home technologies, which they're now in via Vivint, and the constant push for energy efficiency. These are all shaping the industry.
Opportunities and challenges there, presumably.
Absolutely. But NRG's recent strategic moves and their apparently strong financial positions seem to put them in a reasonably good spot to, potentially capitalize on the growth opportunities these trends present, especially with that emphasis on having a diverse portfolio.
Okay. Let's just quickly revisit some key financial numbers. We touched on the big Q1 jumps in revenue and adjusted EPS, and that slight dip in full year 2024 revenue. Did the due diligence report add any other useful financial details?
It definitely highlighted those Q1 increases as significant year-over-year improvements. And yes, it noted the small decrease in full year 2024 revenue.
Did it give metrics like PE ratio or debt levels?
No, the specific values for things like price-to-earnings ratio, debt-to-equity, free cash flow, return on equity, price-to-book, dividend yield, those weren't included in the summary data we have here.
But those are important for valuation.
Oh, absolutely crucial for a full valuation picture. The report rightly points that out. It did make one interesting note, though, that NRG seems to benefit from being a cost leader in its operations.
Meaning they run things efficiently.
Presumably, yes, which is always a plus for profitability.
Got it. And what about leadership? The people running the show, did the sources give us anything on management or governance?
Unfortunately, no. The information provided didn't really go into specifics like how long the CEO has been there or any recent insider buying or selling.
Okay.
For that kind of detail, you typically need to dig into other sources, the company's own investor relations materials, SEC filings, things like that.
Understood. So pulling all this together then, based purely on the information we've discussed today, what's the overall takeaway? Is there a recommendation emerging from this analysis?
Well, if you look at the strong financial performance, especially recently, you consider their diversified business model, which should offer some stability, and you factor in the positive market sentiment. Based on this specific set of information, NRG Energy appears to shape up as a potential buy candidate.
A buy, okay. With caveats.
Always. As we discussed, it's really wise to stay mindful of those potential regulatory risks in the energy sector. They can change quickly, and of course, the market itself can be volatile, so caution is always advised.
Right. So wrapping this up, what does this all mean for you listening? This look into NRG Energy reveals a company that seems to have some significant positive momentum right now. It looks driven by strong earnings and some pretty strategic moves within the energy industry.
And while the information we've unpacked today paints a generally optimistic picture, it's absolutely crucial to remember, as we just said, keep an eye on the regulatory landscape and the overall market conditions. That's always important for any investment decision.
This overview should give you a solid foundation based on the info provided. But as the expert mentioned, further research into specific metrics like the PE ratio, debt levels, maybe digging into those management details, that could offer even deeper insights.
Definitely. It's always good to ask yourself, what aspects of NRG's story, their recent performance, their future prospects stood out most to you as you listen to this?
We really hope this has given you a valuable shortcut to understanding the key points about NRG Energy from the information that was shared with us. Thank you for joining us for this focused exploration.
We appreciate you tuning in.
And if you found this helpful, please do subscribe, like, and maybe leave a comment to let us know what else you'd be interested in us unpacking in future discussions.